Should you invest in real estate now, or should you hold off and wait until the housing market cools off? What's up, guys? It's James Allen, the out-of-state investor, and the reality is right now the real estate market is going higher and higher and higher, and it's putting investors in a position where they're starting to wonder if they're just better off waiting for the market to cool down. Well, in today's video, I'm going to share with you what I'm doing as far as real estate investing, but more importantly, everybody's situation is different, and because of that, I'm going to give you my opinion, what I think you should do, and depending on the situation, whether you're better off to hold off or invest in today's market. But before I get started, do me a favor and support the channel by smashing that like button, and if you haven't already done so, definitely subscribe and hit that notification bell to watch more content like this. And with that said, let's jump into it. Alright, so today I got 3 important things I want to go over before you consider whether or not you want to be investing in today's market. So without further ado, let's get right into it. Now, the first thing we got to talk about is market timing, because that's the question on everyone's mind, right? Is now the best time to be investing in real estate? Now, I say this all the time, but it's all about time in the market, not timing the market. It's a famous quote I heard years ago, and it's really stuck with me since because it's so true that nobody can really time the market. If we could, there'd be so many more millionaires and billionaires out there. It'd be insane. So understand that it is impossible to predict when a real estate crash is going to happen, and understand it's just better to go in more with a time in the market approach rather than a timing the market approach. Also, who's to say that the real estate market isn't about to boom right now? Because in reality, there isn't just some timer that goes off at some point after 10 years or so, and bam, the market's going to crash because it's hit 10 years or something like that. In reality, there have to be some kind of triggers that cause the market to crash, and because of that, there also could be triggers that cause the market to boom, like we've recently seen with these uber low interest rates. As far as triggers that could cause a housing market crash, so far on a nationwide scale, I just haven't seen it yet. The one thing that might come into play down the road is if mortgage interest rates eventually keep going higher and higher and higher, and that could cause an affordability issue, and that could eventually have a trigger on the housing market itself. But so far, we haven't seen any evidence of that yet, and it's also important to understand that in this market is actually a very easy market to get into, in the sense that bank financing is very easy to qualify for at this point. And in addition to that, we also understand we're currently on an upward trajectory. I bring this up because if you can't be confident investing in a housing market where the supply is low that continues to push prices higher, and in addition to that, it's so easy to attain this bank financing, then imagine trying to invest in a market environment where the prices are going down, where it may go another 10% down after you purchase the property. That's a scary environment to think about. And even if that doesn't faze you, it phases the banks. And what happens many times when the housing market goes down and there's a crash taking place is the banks end up tightening their lending standards, and they may not want to lend to you in that kind of a situation. So if you're planning on waiting for the absolute bottom of the market, the problem is you may not even be able to get financing, so you may need to have a whole bunch of cash laying on the sidelines. But what I ultimately think this comes down to, especially when it comes to market timing, is if you plan on being in this game for the long run. Like I said, time in the market, right? And so if you're being in this game for the long run and you're finding a property that will cash flow for you and you get that monthly mailbox money, that's going to protect you in a downturn so you can ride out that wave. And eventually, as we know, real estate prices do go back up again. However, maybe you're older, maybe you're approaching retirement, and you just don't have time on your side. If that sounds like you, then it's okay to proceed cautiously with investing in this real estate market. I would say though, it depends on the kind of deal you're looking at. And that brings me to my next point, that you really want to focus on the kind of deal you're getting. If you're getting a really good deal, then that means you're buying below market value, you're going to insulate yourself, and you're going to be getting instant equity when you buy it. You see, this is what's going to give you that protection from any potential downturn. If you're buying at 70 to 80 cents on the dollar, even if the market were to crash 20 to 30%, you're still at break even, which means that you haven't lost any money because you were able to buy it below market value. Now, on the upside, if things do go your way and you don't have a major market crash happen, now you're in a very good position because you bought instant equity. You basically made instant money the second you closed on that property, and now you're in a comfortable position over the long run to continue investing. Now, this is why you see experienced investors buying in every stage of the market cycle, because deals can be had in every market cycle. It just depends on how well you buy. Now, the reality is most of the properties you see on the market will not cash flow, and they won't be 70 cents on the dollar. So you got to really understand what a good deal looks like in your market. And at the same time, the worst thing you can do right now is buy something at retail price that is negative cash flow, and that puts you in a very risky situation, especially considering the current market conditions we're in. So what I would say is that if you're able to come across a good deal, then I think it's a good idea to move forward with buying it, even in this stage of the market. But if you're looking at an average deal, if you're looking at a retail price, a negative cash flowing property, regardless of the market cycle, you should not be buying those types of deals. Those are not good investment properties. The third point I want to make is I think it's very important right now to look at your current financial position. You see, Warren Buffett has a quote that says, "Only when the tide goes out is when you'll finally discover who's been swimming naked." Now by that, he's referring to the type of investors that over leverage themselves, that push themselves beyond what they can actually afford to keep. And so when times get tough, they end up losing everything they work so hard for. You see, some investors have been leveraging themselves way beyond what they should be. And this actually goes way beyond even just real estate. You see, people have been leveraging on stocks. They've been leveraging even worse on crypto. Then they get margin called and then they lose so much money. In real estate, it's important to understand if you even have the funds necessary to invest in real estate. First, you need a down payment. That's going to be a 20% down payment in many cases. Some lenders will go as low as 15% with an added PMI monthly charge. You also want to have enough money to cover your closing costs and inspections. And when it comes to inspections, never cheap out on your inspections. You always want to do everything necessary to make sure you understand what you're getting into with the property. So you want to get a regular inspection, you want a termite inspection, you want to do a sewer scope, and if there's potential foundation issues, definitely get a structural engineer out there as well. The point is, don't be a cheapskate on the front end, because most times you're going to end up regretting it over the long term. Now, aside from those costs, it is so important, I can't emphasize this enough, to have extra reserves on hand just in case of any kind of emergency. Naturally, over time, HVACs will go out, roofs will need replacing. You're going to need to do some major repairs over time, and you need to be prepared for that, especially if it's just your first property. Have at least a minimum of $5,000 in reserves and try to work that reserve fund up to $10,000. Once you start getting multiple properties, what I do at that point is I end up going about 6 months worth of my monthly expenses. That's your principal, interest, taxes, insurance. So once you're in that financial position where you can afford the down payment, closing costs, money for inspections, and you have money for reserves on top of that, that's the point when you know you're ready to start investing in real estate, because you want to invest in real estate from a position of power, not a position of weakness. So should you invest in real estate now, or should you just wait? Well, I think if you can do the things I talked about today, if you're willing to be in real estate for the long run, if you're able to identify and purchase good deals in your market, and at the same time you have all the funds necessary to not only buy real estate, but have reserves set aside, I think you are in the perfect position to start buying in today's market. So with that said, I hope you guys enjoyed this video, hope you gained some value from it, and if you did, do me a little favor and smash that like button, and if you haven't already done so, definitely subscribe and hit that notification bell to watch more content like this. Also, let me know in the comments below if you have any thoughts or questions, and I'll do my best to get back to you. Finally, follow me on TikTok and Instagram at The Out of State Investor. Thanks again for watching, and I'll see you on the next one.